Okay, thanks everyone for coming today. My name's Deb Kemp. I'm the Economic Development Coordinator at Northern Beaches Council. And you're here today as part of a series of webinars we've been running with the ATO about getting your business ready for tax time in October. So these are weekly webinars during August and September on a range of topics. And we also acknowledge that this is unprecedented times. So it is a lot of information to take in, and you may have some quite specific questions about your business. So I encourage people to go to the chat box if they have specific questions for our presenter, Lyndon, and we'll try and answer those as we go through the presentation, but also there'll be an opportunity to ask questions either at the end or in the follow-up. I'll be sending out details then. So the topic today is running a home-based business, and we know there's a lot of home-based businesses on the Northern Beaches. In fact, this has been our most popular webinar to date. So I'm hoping that you'll find this information particularly useful. Just now, a lot of you, this might be the first time you're coming up to tax time, or you might have a different change to your business. So there's a lot of information out there. And so we'll go through the presentation, and there'll be supplementary information circulated afterwards. So I'd like to hand over to Lyndon just now from the ATO to do the formal introduction. Welcome, and again, I'll speak to you later on during the session.
Thanks, Deb. Appreciate that. And a massive kudos to Northern Beaches Council. You're doing a fabulous job, and we'll hear more about what's happening in the Northern Beaches Council space about halfway through the webinar, break it up a little bit. So look, my name's Lyndon Regina. I'm proudly bringing you running a home-based business webinar from the Australian Taxation Office. So look, what I normally do, I like to place my email address into the chat box. And the reason why I like to do that is because often we come along to these types of forums and we think, should have asked a question, could have asked a question, but I didn't ask a question. So look, if a question pops into your head and, you know, overnight, hopefully it won't wake you up, but if a question does pop into your head, don't hesitate to send it through to me. I'll be more than happy to look at that and respond with general information. Now, in this type of forum, I'm unable to give specific information, but I certainly can give you general direction, and that will include some questions that come through. If I know there's a few things happening in the pipeline behind that question, I will ask you to pick your question up, copy it and paste it into an email through to me. So take note of my email address. And look, I'm also going to place some other information into the it's in relation to the support and the guidance the ATO's got on offer during COVID-19. We know COVID-19 has given business, you know, a good whack, a good shake up, especially with our Victorian friends. But it, you know, no matter what industry you're in, no matter what you're doing and how you're running your small business, just remember that we can tailor payment arrangements, and that's probably the biggest thing that's come out of COVID. So the 27th of March, two things happened. Firstly, federal government came out and said, you know, welcome to restrictions. I don't think they actually said welcome, but, you know, restrictions are here. And the 27th of March also saw the end of AusKey. So if you're a small business and you were reporting portal using an AusKey was hardwired to end. There was nothing we could do about that. The software, it was finished. So we've been busy transitioning small businesses across to the MyGov ID platform, which I'll talk a little bit more about that later. But look, with COVID-19 upon us, what had happened, because JobKeeper had come out and cash flow boost stimulus packages were announced, everybody lodged. And with all those lodgements, this created debt. So if you're in a situation that you do have debt with us, look, don't hesitate to give us a call. And if you can't do what the upfront payment is that we're asking, reach out and actually say, look, I can't do your upfront payment, but I certainly do. I've got something to propose to you. Propose what you can do. Because at the end of the day, just as long as you're working towards paying that debt off, that's all that matters. And, you know, if we need to retailer that payment arrangement a bit down the track, we're willing to do that as well. So again, just don't be afraid to reach out. We can defer lodgements, we can remit penalties, we can remit interest, we can vary your pay-as-you-go instalments. Plenty of things we can do to help support you. Now, if you plan to call us on a Saturday, so at the moment we're operating on a Saturday, that is fluid. It may be subject to change. So just be aware that if you are going to give us a call on a Saturday, just go to ato.gov.au, hit the contact us section, and just make sure that we are open to take your calls on a Saturday, because the last thing, people's time. Okay, I don't like my own time being wasted, and I don't like to waste others. So that's certainly one thing I wouldn't want to do to you. Now, lastly but not leastly, on the bottom of that chunk of information I just placed into your chat box, you're going to see the words ATO community. So more often than not, your questions have already been answered. So to save you your valuable time, what you need to do is go to ato.gov.au. At the top of the home of the landing page, you're going to see an orange ribbon and you're going to see a blue ribbon. In the middle of that blue ribbon, you're going to see the words ATO community. Now, head in there, place your keywords to what your question is into the search function. And look, 99.9% of the time, your answers are going to pop up because somebody's already asked that question. So I've given that tool, that search function, a great run for its money, and it's returned results every single time. So I promote ATO community like there's no tomorrow, because, you know, your time is money and time is valuable. Okay, so look, let's head on into the webinar. It's time to talk running your home-based business. And as Deb said, not only in the Northern Beaches Council, all around Australia, we're seeing home-based businesses pop up left, right and centre. So, you know, it's a great way to be able to learn what you can claim and what you need to do behind that claiming. Let's move on in, but firstly, I would like to respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters and community. I would like to pay my respects to them, their cultures, elders and present. All right, so today we're going to talk the three categories of home-based business. We're going to get into occupancy and running expenses. We're going to talk calculating and how much to claim. We're going to cover motor vehicle deductions, and I'll keep an eye on the time, but I hope to bring you a little bit more detail around our ATO app. Have you heard about the ATO app? Have you got the ATO app? So if you haven't heard of it, if you haven't got it, I'm going to pop something in the chat box for you. You can go and have a look. You can download it from your Play Store or from your Android store, and it's a free app. The ATO can't see inside it. This is your way to be able to keep record keeping and do tax on the go. I love tax on the go, because it means that I don't have to sit down at the end of the financial year, tear my hair out, try and find receipts that have already faded. And you might be guessing where I'm broadcasting from, but we had a day at the beginning of this year. So you can imagine walking out with a thermal receipt in 48 degrees, that information quickly disappears into the atmosphere. All right, so we'll chat more about the ATO app really, really shortly. We're also going to talk depreciation of assets, okay? Now, when you see this little icon, that means we're going to have a chat. I might be asking you some questions. Feel free throughout the webinar to come down through the chat box and ask me your questions, because literally this is your time to shine, okay? This is your opportunity. Make good of it, and afraid to reach out and ask questions, because I'm more than happy to look at all of those questions. As Deb knows, I usually keep one eye on the chat box and one eye on the presentation. So I'm going to ask you a quick question now. So how many people who's a home-based business in the audience? Firstly, are you running a small business, or are you thinking about starting a small business and perhaps running that from home? So if you want to come through the chat box, give me a bit of intelligence, because I'm able to tailor these types of packages to be able to meet your needs. So you're going to walk away full of knowledge, okay? All right, so KT's come through, running a home business, fantastic. Michelle's the same. Bridget, I've noticed your name, Bridget. I saw your name when you first came through. Thank you. Questions via email, they were great. Okay, so you now have Maisie's got a home-based business now, but was previously operating out of the city. And what have we've got planning to start. Her husband's a sole trader. and gearing up to start a home-based business. So yeah, look, that's great. So you're all here for the right reasons, and I will pull out information left, right and centre to be able to assist you to walk away armed full of small business knowledge. All right, let's start this webinar. So there's 3 categories of a home-based business. So firstly, it's working at home without a specific work area. And secondly, it's a dedicated work area or an office. And the third category is home is the place of business. So let's talk working at home with no office. So as I explain each type of the home-based business categories, think about which one's going to apply to you, to your circumstances. So the first one, this is a common situation where you work at home, but you don't have a specific work area at home. So in this situation, the home's not a place of business, as there's no area set aside primarily for business activities. So here we have a business owner working in the lounge room. Category 2, so sometimes you may have a dedicated homework area or office. So this means there is a room or area set aside primarily or exclusively for business activities. Although the actual place of business is not a home, here we can actually see that the business has got a home-based office. So category 3, so this is where home is the place of business. So in this situation, there will be an area set aside exclusively for business activities, and the business is run primarily or exclusively from home. So here we can see the business is an office in the home, but it's separate to the living areas. Okay, so what type of home-based business have you got? Come in that chat box. Do you fit into category 1, 2 or 3? Do you have a specific work area? Perhaps you don't. Perhaps your home is a place of business. Okay, so lots of, actually there's a very bad coming through. Yeah, okay, so category 1, category 2, and for a couple of, especially I think it was Arena, planning to start, husband's a sole trader. Michelle's a web designer, does marketing, and Gordon's got a specific space. So that's good. It's a mixed bag, so we'll make sure we'll cover all the information for you. Okay, so let's talk about the 3 general rules of for allowable deductions. So you must have spent the money for your business, not for private use. We'll talk about that more in a minute. The money spent must be directly related to your business, and you must have a record to be able to show that you spent that money for business purposes. They're the 3 main rules, okay? We'll keep driving. So occupancy expenses and running expenses. Let's talk more about that now. So if you're a sole trader or a partnership and you operate a home-based business, look, you may be able to claim for some of the expenses related to the area of your home you use for business purposes. So these expenses are divided into 2 broad categories. So firstly, running expenses. They are the increased costs of using your home's facilities due to your business activities. So that's like things like electricity, gas or landline phone. Occupancy expenses, look, they're related to the area of your home you use for business. For example, rent or mortgage interest. Look at how the categories of a home-based business affects the deductions you can claim for expenses for sole traders and for partnerships. Now look, I'm just going to mention this session's being recorded, so if you come through on webcam, I'm just reminding you that you may be, well, you will be recorded. So if you want to turn your webcam off, that's your choice. If you want to leave it on, that's your choice as well, okay? All right, so if your home is not a place of business, then one of the first 2 columns are going to apply. You can generally claim deductions for additional expenses you incur. For example, the cost of your business telephone calls to your landline, additional utilities costs such as heating, gas, electricity, and the decline in value of business furniture and equipment. Now, just note that if you do not have a home office, You cannot claim for the decline in value of curtains or carpets, as these are considered as part of private living expenses associated with your normal living costs. I must emphasise that claim additional costs incurred because you're conducting your business activities from home. Now, you can only claim occupancy expenses if your home is the principal place of business. In addition to running costs, you can generally claim a proportion of the mortgage interest or rent, council rates and insurance premiums. We're going to look at the rules around claiming occupancy expenses shortly. Now, the ATO, we've got a home office expenses calculator on our website. Okay, so put your money to good use. You pay your taxes, head to ato.gov.au, scroll all the way to the bottom of the landing page. Look, it's slightly on the left-hand side, but it says calculators and tools. We've got all the calculators and all the tools to assist you with meeting your taxation and superannuation obligations. So head to the ATO website and let us do the work for you. Sounds too good to be true, doesn't it? All right, so let's have a little bit more of a look in regards to this example. So Megan's a sole trader. Sorry, I've missed one. Sam's Plumbing. We'll look at Sam first. So Sam provides plumbing maintenance in commercial buildings in the city. He runs a home-based business. So this is a lot like Arena. Her husband's going to be a sole trader. So he runs a home-based business when he's not working at his client's premises in the city. So he does his bookkeeping from his lounge. He doesn't have a home, he doesn't have a room for a dedicated office. So what sort of deductions do you think he can claim? Come on through via the chat box. Do you think it's something, along the lines of gas, electricity, telephone, decline in desks, computers, a decline of values, a decline in curtains and carpets, or perhaps occupancy expenses? And I'll go through that a little bit more now. Okay, so he can claim the costs of utilities such as gas and electricity. He can claim for his telephone use. And you're all right coming through the chat box. I'm keeping an eye on what's coming through. He can't claim the decline in value for things like curtains and carpets, and he cannot claim for occupancy expenses either. So the difference is, Linda's asked, what's the difference between category 1 and category 2? Look, category 1, you're doing your bookwork from your kitchen table. So in the kitchen, your kids are in the kitchen, your spouse may be in the kitchen. It's a shared area. But whereas category 2 has actually got a dedicated work area. Okay, so I hope that's answered that for you, Linda. If you'd like more information, Linda, don't hesitate to email me that question, and I'll be more than happy to send you back some links in relation to that. So let's also look at Megan. So Megan, as I was saying, is a sole trader. She's got a home-based business and she's trying to figure out whether she can claim occupancy expenses. So to be able to claim deductions for occupancy expenses, she has to pass the interest deductibility test. Now, to pass the test, the area of her home needs to have a character of a place of business. What does that mean? It means that you may have a sign that identifies your business out the front of your house. It's not readily suitable or adaptable for private or domestic purposes. And the area is exclusively or almost exclusively for carrying on your business. And also you may even receive visits from your clients. So that sort of steps it out in relation to identifying your place of business. So some examples around that may be a hairdresser's salon, a caterer's home kitchen, a photographer's home studio, perhaps a bed and breakfast operator, tutors, financial advisors, bookkeepers, even childminders. So there's a broad range, and I saw a couple of different occupations coming through. So web designing, so things like that from home. Going back to Megan's example, if she passes the interest deductibility test, she can claim for her occupancy expenses. Now, in this case, she may have to pay tax on any capital gain she makes when she sells her home, regardless whether she borrowed money to buy her home or whether she decided not to claim a deduction for occupancy expenses when she was entitled to. However, if personal services income rules apply to Megan's home-based business, she cannot claim occupancy expenses regardless of whether she passes the interest deductibility test or not. She'll need to use the personal services income tool on the ATO website to see if the personal services income rules actually apply to her home-based business before claiming occupancy expenses. Okay, so I'm going to look at the chat box. We've had a couple of questions come in, and Linda just wanted a bit of a clarification. It was actually between the category 2 and the category 3. So category 2 is, as I was saying, an office that is dedicated to your home-based business. Category 3 is your home-based business. So for example, I grew up on a dairy farm. Okay, my mum and dad had their own home-based office because the business was being run from home. So I hope that's covered it for you. If it hasn't, email me and we'll cover it via email. Let's have a bit of a look at Rocky in relation to how superannuation works for small businesses. That's a big question. Okay, so it all depends on what type of entity you've got. It all depends on whether you choose to put away the 9.5% superannuation, and yes, it is still 9.5 at this stage. I know there's been a bit of banter over the media channels overnight. That certainly isn't fact. It's just speculation in relation to our federal parties discussing superannuation rates. So Arena, sorry if I'm pronouncing that incorrectly, Irina. So a photo of the business sign logo is sufficient. Look, you don't even have to go that far. Look, at the end of the day, that if your home is your place of business, if you were to be audited, and I used to be an auditor, what would happen is we would ask you those sort of questions. So I wouldn't go to town on it. Certainly I would, if you were to be audited, you would just say, well, you know, like an example of my home-based business is I've got a sign out the front, and someone like me would go, oh, right, okay, all right, so you're a home-based business. So I hope that's helped you. Now, Glenna said, am I right in understanding you have just covered category 1 and category 3 with examples of Megan and the plumber? Spot on. Absolutely. Because category 2 and category 3 are very similar, but I'm going to go into more detail on that now. So I hope that's all helped you. Let me get into a bit more detail, and it might cover some of your questions that are coming through. About occupancy and running expenses for sole traders and partners that can claim for their tax deductions. Now, if your business is a company or a trust, the rules has anyone in the audience got a company or a trust? That's probably one thing I'd like to hear. So come on down. Have you got a company or have you got a trust? We'll keep driving along with this piece of information for you. So let's take a look at John and his business. So John's home-based business is structured as a company. His business name is John's Repairs. He runs the business from a workshop at his home, which he owns. In this case, the company John's Repairs should have a formal marketplace rental agreement in place with John, the owner of the property, to use part of his home. And the agreement will determine which expenses the business pays for and can claim as a deduction. So if John does not have a formal market value rental agreement in place with his company, there are a number of implications for both him and his company, centered around whether they're going to receive the benefits from not having a formal agreement. So if the income John's Repairs receives is the personal services income rules will apply, and the income will be treated as his individual income for tax purposes. This will affect the deductions he can actually claim. Okay, so Bridget, we're going to go into trust. Just hang to. We're going to cover that in a minute. And I'm also going to break down, I'm going to give you a little bit of example around that capital gains tax as well. Actually, I might just Okay, let's cover capital gains tax now, because this is often a question I get in my face-to-face seminars when I host them around New South Wales. So a lot of people gains tax is, is it better for me to claim the occupancy expenses now, such as part of your mortgage interest, your rent? And there is a bit more of an example in this package, and I will lead into that in a minute. I'll just get this into your head to start with. So what I say to small businesses, have a think about how long you're going to have your home for. That's probably the first thing. So if you're thinking about selling up in a year or two, okay, so we know what the current market's like at the moment. Think about this. Are you better to get the deductions in your pocket now, right, every financial year, or and be subjected to a capital gains tax when you sell your home? Or would you prefer to not claim the deductions now and not be subjected to that capital gains tax down the track? So I'm just going to leave you with that. Have a bit of a think. We are going to cover this in a little bit more detail. And again, any questions around that, because I do get a lot of questions around the capital gains tax space, don't hesitate to email me and I'll be more than happy to point you in the right direction. Okay, so I've just popped my email address back into the chat box for anyone that missed that. So once you know what you're entitled to claim in respect to your home-based business expenses, you need to then work out how much you can claim for businesses' use of your home facilities. So you can't claim a deduction for the private use of your home facilities. So there are a number of ways you can do this depending on your situation. So if you're entitled to claim occupancy expenses, you can claim a percentage of the expenses based on your floor space, and the amount of time during the year that you've used the space for business purposes. So let's go back to Megan's example. She's a sole trader operating a hair salon from a business. She has a hair salon attached to her home that she uses almost exclusively for her business. She passes the interest deductibility test, and personal services income rules do not apply to her business. So it means Megan can claim for occupancy expenses. So her salon covers 10% of the floor area of her home. She runs the business 5 days a week. She uses the salon space for private use when she's not running a business, and her home insurance premium for the year is $800. Now let's just work across that 10%, okay? Now I'm going to put my auditor's hat on when I always host these types of conversations. So we've seen many tax returns come through and they claim for 90% home-based office. So they claim 90% of their expenses. So what I'm going to say to those types of people that claim 90% floor space is, I can see you've got 3 dependents and you have a spouse. Where do they live? What happens with them? So they live in 10% of your home and your home office is 90% of the space. I could only dream to have 90% of the space of my home. I think that would be fantastic. But they're the type of logical questions that we look at. We think, well, hang on, it's the same as claiming 24-hour expenses, which I'm going to cover in just a minute. So people, I work from home 7 days a week. I work 24 hours a day. So my most logical question to those types of claims are, when do you sleep? Like, do you eat? What happens with your children? Like, do you spend any time with your children? What about, you don't go out? You don't go grocery shopping? So things like that, very logical questions, but they're immediate questions for an auditor. Well, hang on, like, how are you running your life? So that's when we'll go and ask for personal living expenses and we'll drill down a little bit further. But let's go back to Megan with that $800 insurance premium for the year and see how she works out as to what she can claim out of that $800. So the formula to calculate her claimable amount is the cost which the amount of premium is in this example. So you multiply by the percentage of the floor area of her business, then she multiplies the percentage of the days that year. Now, because she uses the place for private use when she's not working, she'll need to work out the percentage of the days that she uses her place for business. As she works 5 days a week, she multiplies 5 by 52 and she gets 260 days, which is about 70% of the year. Now, don't forget, Megan, and I'm sure you do as well, you take holidays, have a couple of sick days. Okay, you can't include the holidays and the sick days into those claimed days, okay? So let's assume Megan didn't take any days off. Megan's like super healthy, didn't get sick, and loves working, hates holidays. That's all I'm going to say about that. So the premium, $800 multiplied by 10% of the floor area, so by over 70%, comes or equates to $56. So Megan can claim $56 out of the $800 for deductions of a home insurance premium as part of her occupancy expenses. Now, Megan worked all that out on the Home Office calculator. Okay, so just remember, get the ATO to do the work for you. Now, let me have a little bit of a look at the questions that are coming through. Michelle said, can you send out your slides? Sorry, Michelle, we don't send out our slides, but Deb Kemp at Northern Beaches Council, she's a whiz. She's got a handout, so she's going to actually send you the handout, okay? Now, Linda said, if the place of business and area is not suited for private use, then there isn't a set per 365 days a year for the business. Well, if it's not used for private use and it's business only, well, you would claim the business proportion of your use. Working 7 days a week, 24 hours a day, and you haven't burnt out already, you must be superwoman. But yeah, so if it's not used for private use, well, you would claim it for business purposes. Now, there was one question that I am going to go back to, and it was about trusts. I'm just trying to find the name. I'm sure you're going to know who you are if we come back. Somebody came through and said, what about trusts? So trusts operate in exactly the same manner as companies, okay? And that's all that in your handout. All right, so, sorry, it was Bridget. I should have remembered your name, and I love the spelling of your name too. So yeah, trusts and companies work exactly the same. So trust partnerships and companies are very, very similar. All right, so let's keep driving on in. Let's have a little bit of a look at running expenses. So how do you calculate the amounts you claim for your running expenses? And it's a very common question. So there are 3 methods you can choose from to calculate your running expenses of your home-based business. So it's a pattern of use, or floor area, or hourly rate. How you can do that, because don't make your tax obligations hard. Make it as easy as what you can. So firstly, to work out the pattern of use, you need to keep a diary for a representative 4 weeks that shows how you use your homework area, and that's used on an average basis. Okay, so you're not obviously going to record your 4-week diary over the busiest 4 weeks of the year. You want to get an average, okay? And obviously, if you take holidays and perhaps you take a bit of sick leave, you've got to incorporate that as well. So the floor area method. This is often the most appropriate way of working out some of your running expenses. So you can separate your expenses based on the proportion of the floor area of your home that you use for your business, or the proportion of the year that you used it in business. The method can be appropriate for expenses relating to electricity, gas, and cleaning. Thirdly, instead of recording actual expenses for heating, cooling, lighting, cleaning, furniture, depreciation, you can claim a cents per hour. And personally, I'm a bit of a fan of the cents per hour method because I find it really easy, because on average, you're going to know how many hours a day you're working, and you're going to know how many days a week that you work, okay? So currently the rate was 52 cents per hour. So this rate has been worked out based on the average energy costs and value of common furniture items used in a home-based business. This rate, look, it's reviewed regularly, so check ato.gov.au and just make sure that you're up to date. Now, adding a big note to this, as of the 1st of March 2020 to the 30th of June 2020, there's also a shortcut method which has increased the rate to 80 cents per hour and covers more expenses such as the decline in value of your computer under the increased rate. Now, if you cannot use any of these methods, you can use other methods as long as they're reasonable in your circumstances. So you exclude your private living costs and you record how you calculated that business expense. So let me just go back to the cents per hour method. I've had a few people come back to me, and if you're anything like me, I've already looked. Okay, so if you're coming to this webinar and you're thinking, oh, I could have done that, you've got the opportunity to be able to amend your tax return if that's what you would like to do. Okay, so you can go back onto your MyGov account, or if you've got a partnership, a company or a trust, you can amend those tax returns as well. But if you're a sole trader, you can go back through MyGov and amend your tax return yourself. So that's just a little quick tip for you. All right, so look, let's go over some points that we've covered so far. So we've talked about the 3 home-based business categories, okay? And there's more information about your handout to step you through category 1, 2, and 3. We've also talked about occupancy and running expenses, and I've just touched capital gains tax. If you want more info around capital gains tax, come through to me via email. I'll point you in the right direction. We've also chatted about calculating claimable amounts and how we do that, and taking into consideration our sick days and our holidays and time away from your home-based business. And we've also talked about the methods to calculate the amount, so those 3 methods, okay? And don't forget that if you have already lodged that tax return and you want to claim that 80 cents per hour from the 1st of March through to the 30th of June 2020, you've got the power to be able to amend your tax return. Okay, so Stephanie's come through and said what's included in the 52 cents per hour. So that's included things like your energy, your running costs. So can I suggest you go to ato.gov.au, place in running costs, or place in home-based business into the search function, and those pages will come up. They've got some great examples there, and it'll be able to answer your question in more detail. However, past that, don't be afraid, Stephanie, to come through back to me, and I'll be more than happy to answer any residual questions leading on from that information on ato.gov.au. Okay, so Irenia said, so cents per hour after the 1st of the 7th is back to 52 cents per hour. And you know what? That's actually a really good question, because that only popped into my head yesterday. Irene, watch this space. Look, I think, you know, since we've hit COVID, a lot of things have changed. Federal government has come in and, you know, they've really pulled out the massive trump cards in relation to how we can support our small businesses, or support all businesses through these challenging times. So all I'm going to say is watch that space. I don't have a crystal ball. I wish I did, because I want those lotto numbers. But keep an eye on when it comes tax time next year, or just keep an eye on your media releases, because more may come out around that. Because see, we still haven't even got a vaccine for COVID. So we don't really know how long COVID's going to go for, do we? So again, it's kind of a bit of a crystal ball thing, but who knows? Federal government may come out and say we're going to extend that 80 cents per hour. So you know as much as what I do at the moment, but just keep a bit of an eye on ato.gov.au, in particular come tax time next year. And no doubt we will be running more webinars with Northern Beaches Council, you know, in the future. And so we'll be bringing the latest in the latest and the greatest in tax and superannuation to your space. So we'll be able to update you as the federal messages are filtered through. Okay, so can you repeat the start date for the increase of 80 cents per hour? Gordon, boom, off the top of my head, 1st of March 2020 up to the 30th of June 2020. Okay, so let's have a little bit of a look at motor vehicle deductions. So If you're operating a home-based business, you can claim the cost of trips between your home and other places if the travel is for business purposes. So things like visiting your client's premises, purchasing equipment and supplies, doing your business banking, perhaps you need to go to the post office, which reminds me, Father's Day this Sunday, don't forget to post your Father's Day cards. I've got to do mine today. I've got to put a post-it note in the front of my head because mine needs to get to WA and I think I'm running short of time. All right, so I'll keep driving on. So things like going to visit your tax agent. So they're all business-based kilometres. So the deductions you can or your business use of a motor vehicle, look, it depends on your business structure, the type of vehicle you use, and whether you also use the vehicle for private purposes. So let's use this flow chart to find out who can claim what. Now, if you're a company or a trust, you can claim actual costs based on the receipts of all expenses that you're claiming. So you can claim private usage accounted for by the company, but this can become a little bit more complicated than we're going to go into here. So this actually, if this applies to you, you need to explore car fringe benefits. Now the ATO, Deb, we're not, actually I'm just going to bring you in quickly, Deb, we're not doing the introduction to car fringe benefits, are we? Well, that's
No,
not,
it's not in this series, but
okay.
maybe we can link through to some information.
Yeah, absolutely. And Deb, I've got a link that I prepared earlier because I wasn't 100% sure off the top of my head. I run a lot of webinars. I do about 4 to 6 per day. So I try my very best to keep on top of everything. But look, the ATO run 4 to 5 business webinars per day, Monday to Friday. So if you were to go to this link, if car fringe benefit taxes may be affecting you or you're thinking about purchasing our company vehicle, head to our small business webinar link, register for introduction to car fringe benefits. We're getting some amazing numbers to our webinars. So don't hesitate to tune into one of them. If you get me, don't be afraid to put your hand up in the chat box and say, hey, I'm from the Northern Beaches Council. Otherwise you'll reach my colleague Matthew. And Matthew has an incredible head full of knowledge for tax and superannuation. So I can guarantee you're going to be in the best hands. All right, so look, let's have a bit of a look at vehicles for more than 1 tonne. Okay, so if your business uses a vehicle and the vehicle's got a carrying capacity of more than 1 tonne, you can actually claim the actual costs. Okay, so if the vehicle's carrying capacity is less than 1 tonne, you can get deductions for the proportion of business use for the vehicle you own, lease or hire under a purchase agreement. So now how do you, and you can also access those streamlined methods to work out the car expenses as well. So again, I'm going to promote the ATO calculators and tools, ato.gov.au, scroll to the bottom, on the left-hand side, calculators and tools. So you can actually work out your claims towards your vehicle via using our car calculator. So have a little bit of a look at that. It's called the car expenses calculator. So are you doing more than 5,000 kilometres? And this is, you know, I just get a continual stream of yeses coming from our country constituents because, you know, all their business, just a couple of trips to town will clock up 5,000 kilometres. So if you are doing more than 5,000 kilometres motor vehicle deductions for one vehicle, you need to have a logbook. Okay, so this is called the logbook method. So with this method, you need to keep a record of your travels for 12 weeks. The logbook needs to provide a percentage rate of your business use to apply to the costs of running and owning your vehicle. And this can include depreciation as well. So the 12-week period, it needs to be representative of your travel throughout the year. So we go back to that average thing again. Just make sure it's not your busiest time of the year. Do it as an average over the year. Now you can rely on a logbook for 5 years. So you can use the same logbook even if the car is replaced, if your usage is the same. You record the start and at the end of each income year. Now, if you don't want to claim more than 5,000 kilometres in motor vehicle deductions for one vehicle, you then have a choice of using logbook or using the cents by kilometre method. So if you use the cents by kilometre method, your claim is based on a set rate for each business kilometre that you've travelled. The rate is reviewed and updated regularly. So just keep a bit of an eye on to make sure that you're claiming for the right rate if you're claiming under that 5,000 kilometre benchmark. So when choosing a claim method, if you satisfy the method requirements, you can choose the one that gives you the best result. You can also use different methods for different vehicles. You can change methods from year to year, and it's important that you keep appropriate records to support your claim. So in saying that, I'm just going to pop a link into record keeping for small business. Did you know 60% of small businesses fail in the first 3 years? Want to know why? It comes down to record keeping. People don't know what income's coming into the business and what expenses are going out of the business. So record keeping, there's lots of different ways you can do it. No way is right, no way is wrong, just as long as you record all your income, your expenses, and your business-related kilometres. Now, what I'm going to do, because the next screen on this is going to be all about the ATO app. So whilst I have a little bit of a look at the chat box, I'll do that now. Do journeys to and from the former office count as a business trip? And what about trips from home to a client? Well, look, if you've got a home-based business, yeah, absolutely, because your business is based at home. So you can claim from home to the client and from the client back to the home. But let me give you a little scenario. So if you go from home, you go visit your client, then you go and pick the kids up from school, you know, jump into Woolies, pick up your dinner that night, and you might call in to, you know, do a couple of errands for the mother-in-law, for the father-in-law, whoever. They're all private related kilometres. So in that scenario, you can claim your kilometres from your home to your client. Past your client, you can't claim those kilometres. It's fairly logical. If you're doing kilometres for business-based, for a home-based business, business-based, you can claim those kilometres. But as soon as you put private in there, you can't claim those kilometres. Okay? All right, so look, what I'm going to do, I'm going to go back to our dearest friend Deb at the Northern Beaches Council. Deb's going to tell us what's coming up in the Northern Beaches Council space, what's happening, what can we look forward to during this COVID-19 pandemic? Because I'll tell you something, I need something to look forward to. So bring it on down, Deb. I want to hear all about what's going on.
Thanks, Lyndon. So yeah, well, since the start of the COVID pandemic, Council has been very proactive in supporting small businesses. We are quick to put together a business support package that included fee waivers, particularly things like outdoor dining, inspections, but also trying to be more relaxed around some of the compliance issues, particularly putting in click and collect parking spaces. Also putting out a fortnightly newsletter, which I hope most of you can have access to, and I'll provide you a link. And this is really just trying to give local businesses updates about what council's doing and also what state and federal government are doing, and as much as we can, keeping you up to date with the changing business restrictions. We've also been trying to look at some positive local news stories about businesses that have pivoted during COVID, and we've got 5 case studies that we're promoting through our social media, and I think this gives some inspiration to other businesses about how you can successfully change your mode of operating to meet new customers in this difficult time. We've also just done a business recovery survey asking businesses to the extent they've been impacted by COVID, what support they've got and what additional support they would need. So this is something that's really highlighted, particularly the need for more support with digital marketing. And we're now developing a digital marketing program that we want to hopefully roll out to a number of businesses, particularly the bricks and mortar town centre based businesses who are really struggling to date. So certainly council's key role here is just trying to connect with our businesses and keep you informed about the changes as much as we can. I see there's a question already about parking. That's always a popular topic of council. Is council doing anything for parking permits for small business owners, sole traders? I think in the case of the parking, it was actually more for customers, and so particularly getting that parking around takeaways and restaurants to enable people to do quick parking turnover to collect items. So there's not anything specifically just now for sole traders, but maybe if that's an issue, particularly home-based businesses, residential areas, happy to explore that further.
You know what?
Back to Lyndon.
You know, parking is always the big question, isn't it? I always worry about parking, and because I'm a country girl, you know, we just park anywhere. But you know, when you live in the city, you just can't park anywhere, and just driving on the roads it's just so busy in these big metropolitan areas. So I understand why people ask questions around parking all the time, because I'm just scared of getting to my windscreen and there's something lurking underneath my windscreen wiper. All right, hey, thanks for that, Deb. And look, it sounds like Northern Beaches Council has really got it covered in relation to supporting your community. And I'm going to head to your website and check out those data stats, because I think that's really, really interesting. But look, thanks. Conscious of the time, we've got about 8 minutes and I want to cover off on a little bit of depreciation. But just before I do, ATO app, I'm just going to place that link again into the chat box. I prepared that earlier. So if you haven't used the ATO app, may I suggest you go to your Play Store, download it, just to give you a really brief update of what it is. Firstly, it's free. Secondly, the ATO can't see inside the app. It would be a breach of privacy. Let's get into it. So the ATO app can record your income, record your expenses, and record your business-related kilometres on the go. Let me give you an example. If I owned a wood chopping business and I needed to head to Bunnings and pick myself up a new chainsaw, because the other one, you know, I seized it, I grab my chainsaw, I go to the counter, I hand over my money, and I get one of those receipts. Okay, 48 degrees, I walk outside of Bunnings, poof, all my information's gone from my receipt. So get in a nice healthy habit. The ATO app's all about healthy habits. So when you're at the Bunnings counter, take a photo of the receipt. It literally takes less than 30 seconds to upload the information, because it automatically calculates your GST. If you're a sole trader, or what happens, all the data, including the photos of your receipts, your business-related kilometres, expenses, and income, heads into your cloud. Come tax time, if you're a sole trader, you can ask My Tax, which is inside ATO Online, to bring the data down from the cloud and automatically pre-fill your tax return. So gone are the days of thinking, where do I put that? And where does that go in my tax return? So it's all automatically done for you. All you need to go to is the last page in your tax return for a sole trader, and just make sure those calculations are right. If you're a partner, if you have a partnership, a company, or a trust, no dramas. You can still use the app, do your tax on the go, get into a nice healthy habit, and come tax time, you can bring the data down from the cloud in an Excel spreadsheet format and shoot that off to your accountant or your tax professional, or lodge the tax returns yourself. Depends on how you want to do it. Same as for a sole trader. So if you use an accountant, a tax professional, you can also bring the data down from the cloud in an Excel spreadsheet format. Okay, so that's the ATO app. I encourage you to use it. I use it. The GPS on the app is absolutely on. I've given it a test, and I've given it a number of test runs, and it works brilliantly. So it just means that all your tax is going to accumulate year to date. You're going to know exactly how much income you've got coming in, exactly how many expenses you've got going out. It's going to give you that lovely bird's eye view, that overarching view of how your small business is performing. All right, so look, I'm just going to head on into depreciation. Do you have to provide your spouse's income? Glenn, is that in the ATO app? Is that what you mean? I'll just keep driving into depreciation, and I'll keep a bit of an eye on that chat box. So look, there's two, when it comes to depreciation, there's two sets of rules. You can use either one, the general depreciation rules or the simplified depreciation rules. I'm not going to go through what's on the screen there, because I'm sure you can read that. But most small businesses use the simplified depreciation rules because you know why? They've been simplified. They're heaps easier. And if you're anything like me, simple is great. I like simple. The instant asset write-off, that comes into the depreciation rules as well. So let me just place some information about the instant asset write-off into the chat box. It's been extended. Originally it was only going to go, it went from 30,000 up to 150,000, and it was only going to go up until the 30th of June 2020. Josh Frydenberg came out a couple of months back and he said, you know what, federal government's going to extend that to the 31st of December 2020. So what does that mean? That means that you can claim the instant asset write-off in your 2020 tax return and your 2021 tax return. Okay, so you can actually claim it over 2 separate financial years. Now, with the depreciation, you can choose the method that will be better situation, but if you choose the simplified depreciation rules, you must use them for all of your assets. Okay, now for more information, head to ato.gov.au, put into the search function depreciation, all the information, big smorgasbord of it, it's all there ready and waiting for you. So let's look at a couple of questions. If I go out and buy a new van, can I deduct that? So it depends. It all depends on your situation. And as I said, it all depends on the cost of the van and when it was purchased. If it's more than the threshold, so more than the 150,000, you need to deduct it over a number of years. So the threshold's reviewed and updated regularly. So check the threshold on ato.gov.au. Let's look at another question. So depreciation deductions only apply to new purchases? No. Okay, they apply to new and ready to be installed items for your business. The instant asset write-off, can it only be used once per annum? Well, that's another bomb. Okay, so to find out more information about that instant asset write-off, because there is quite a bit available on ato.gov.au, head to our website and enjoy that smorgasbord of tax and superannuation information. Okay, so there's more information on ato.gov.au. We've got it all there. You want the facts, head to ato.gov.au. Don't rely on hearsay because that's what will get you into trouble. Business.gov.au has a fantastic buffet of information there as well. Now, look, I'm just going to go back to Glenn. Do you have to provide your spouse's income in your tax return? Yes, absolutely. Yep, you need to provide your income and your spouse's income, okay? And your tax return will ask that. No worries, happy to help out. Elias, I think I need new glasses. Elias, I brought it in June, part of setting up my business, but I didn't, oh, here we go. I didn't earn any money until July. So next tax year, is this okay? Yeah, look, if you haven't, actually, you know what, Elias, because I am looking at the time, that's got a bit of detail behind that question. Do me a favour, pick that question up, copy it into an email, and I'm going to answer that with a couple of different links, because as I said, there's a bit of information sitting behind that. So look, the ATO's everywhere. We've got some really proactive deputy commissioners and assistant commissioners that post regularly across Facebook, Twitter and LinkedIn. So if you want to be at the forefront of what's happening in the tax and super space, follow us on our social media platforms. If you're a how-to, to the ATO YouTube page, find out how to do stuff. How do I work out my depreciation? How do I work out my running costs, my occupancy expenses? Lots of information there for you. The ATO is here to support and guide you through small business, and in particular, our thoughts are going out to all small businesses affected by COVID-19. Hang in there. We're here to support you. Northern Beaches Council are standing right behind you. So don't hesitate. As I've said all the way through the webinar, reach out. We're here to help. I'm going to hand back to Deb Kemp now. I'm Lyndon Regina, signing out from the Australian Taxation Office, and I'll answer your questions via the chat box, via text. Thanks for your time. Look forward to seeing you next time.
Thanks, Lyndon. A lot of information there. So as I mentioned at the start, we are recording this webinar and we'll be putting it on our council website, hopefully in the next couple of days. So I will send you a link through to that. Also encourage you to reach out to Lyndon with the email address that she provided in the chat box at the start. And yeah, hopefully stay connected. We've got another 3 of these webinars coming up. The next one is about budgeting your commitments, and then it's managing your cash flow, and then the last one is becoming an employer. So hopefully you want to register for some more of those or share it with your networks, and hope to see you at a forthcoming webinar or event. Thanks again, everyone, for your time today. We do really appreciate it. Thank you.
Bye for now.